Hi, this is Michael Jones, Chairman and Chief Executive Officer of Caravel Concepts. Welcome to Market Insights, our weekly commentary on political and economic events and their potential impact on financial markets. Let's get started. Well, it is very appropriate that my wife Amy has put up our Christmas decorations because there has been a huge amount to celebrate over the last week or two in financial markets. We have broken out to new highs on the S&P and the NASDAQ. The president has acknowledged that if the Electoral College votes to put Joe Biden into the Oval Office, that he will peacefully leave, which is good news for financial markets. And then last but certainly not least, we have had yet another COVID-19 vaccine show to have 94 to 95% efficacy. This now means that we have multiple vaccines that are going to be deployed as soon as the next 2 weeks for first responders and other healthcare workers. And as we move into 2021, these vaccines will become more widely available for the general population. This means that maybe by next summer, next fall at the latest, things could possibly be back to normal in the global economy. So, lots to celebrate. Let's talk about a few things that people may still be worried about. Because whenever the market breaks out to brand new highs, there's a lot of people that start saying, okay, but what could go wrong? So let's talk about what could go wrong and why we think that 2021 is likely to be another really successful year for investors. Probably the first thing that we'll encounter that could go wrong is that Congress and the president will not be able to agree on a stimulus package for COVID-19. Now, we had a bipartisan group of congressmen, Democrats and Republicans, who proposed a new stimulus package, and just yesterday, Senate Majority Leader Mitch McConnell poured cold water on that proposal. However, he and Nancy Pelosi have apparently been exchanging messages, so something could potentially happen. I am personally concerned that we're running out of time, and there's going to need to be a spending package approved, or the government's going to shut down. And there's just only so many days left in the legislative session. So I think it's very, very possible that we do not get a stimulus package in the lame duck session. I don't think markets will be too terribly upset with that. There may be a slight pullback in just disappointment, but most people are focused on what the new Biden administration is going to propose and the likelihood that that could be a much more substantial stimulus package, and that's what markets are really hoping for. Lots of fiscal stimulus, and just as importantly, lots of money printing by the Fed to finance that stimulus package. That's the magic combination that made 2020 such a powerful rally year for markets despite economic recession and COVID-19. Put that same policy package in place in 2021 and add to it a real economic recovery thanks to vaccines. You can see why equity investors could be pretty excited about that. So, could be a short-term disappointment there. Long-term, we think that one's going to be okay. Next potential disappointment is on the political front. More politics. But two things could happen that could upset the market short-term. One is that the House of Representatives there are some members of the House of Representatives on the Republican side who are going to try and overturn the Electoral College vote. Now, before you get too upset about this, if you're a Democrat, the Democrats did the same thing in 2016, and they also did it in 2000. It went nowhere because the Senate gave absolutely no support to these efforts. Now, there's a little more uncertainty this time around because obviously the Senate is in Republican hands, but I personally believe the Senate is so closely divided, and there are enough people that would cross over to vote in support of the Electoral College, that while this could cause some volatility, it's not going to be a constitutional crisis. All right. One other thing people could worry about is, what about the Georgia elections? Part of our thesis for a powerful rally is that there won't be big tax increases because the Senate Republicans won't allow it. Well, what if they don't retain control? What if they lose the Georgia elections? This one's a little closer call, because the reality is no matter what the polls say, it's hard to trust polls in an era where there is unprecedented turnout from new populations who didn't used to vote. So white working class voters turned out in massive numbers to vote for President Trump, completely out of the polling models, and people under 30 showed up in unprecedented numbers to vote for Vice President-elect Biden. None of that has ever happened in the past. The numbers, it's tens of millions of people showed up to vote that had never been in the polling data before, which is why the polling firms had such a hard time capturing who and would win different elections. In the Georgia election, how many of those white working class voters are going to show up if there isn't a President Trump on the ballot to vote for? Don't know. How many of those under 30s are going to show up to vote for the Democratic alternatives for Senate when there isn't a President Trump to vote against? Don't know. What we do know is that whatever the polls say, take them with a grain of salt. Now, I'm going to go back to my thesis on the Electoral College, though, before you get too worried about whether this could disrupt financial markets. And that is that the Senate, no matter what, is going to be super closely divided. And there are plenty of senators who have proven in the past that they will cross over. And so we don't think that there's going to be the kind of consensus that would be required for big tax increases that would upset the market, no matter who wins in Georgia. So, last thing to potentially worry about that could disrupt financial markets. The thing that really underpins everything is valuation on equities. You're going to hear a lot of people talk about how PE multiples are getting close to levels that have been dangerous in the past, and particularly what is called the Shiller PE, or the cyclically adjusted PE, which takes into account 10 years worth of earnings and compares that to prices, and it's getting too close to levels that historically have meant trouble for the financial markets. Now, our confidence on financial markets in 2021 is premised on the fact that interest rates are at historic lows. When you adjust those valuation figures for the current interest rate levels, they don't look so scary anymore. As a matter of fact, they look much closer to average levels in comparison to interest rates. So the thing that you would worry about is, could interest rates rise? And Fed Chairman Powell has been pretty clear that he doesn't think there's any need to raise interest rates, and that he actually is standing by to print more money and depress interest rates further to finance more government spending. The new Treasury Secretary is looking to be Janet Yellen. I think the Senate will confirm her. And if she is confirmed, a Secretary Yellen is on record being very similar to Powell in believing that the economy can withstand much lower interest rates much longer without having to worry about inflation. Both of these two key policy figures for 2021 are on record as saying that inflation isn't a problem, and you don't see wages rise for lower income workers, the folks who have really been left behind for the last 20 or 25 years. Wages haven't proven to rise until unemployment gets below 4%. That's what we learned in the Trump presidency, that we didn't see inflation take off, but we did see wages for low income workers take off once unemployment got below 4%. Powell believes that, Yellen believes that, and I think we're going to see interest rates stay low until unemployment is much, much lower than it is right now. As long as interest rates stay low, valuations for equity markets can stay elevated, and all that stimulus is going to keep driving equity markets higher. Thanks for joining us for Market Insights. We hope you found it informative. If you'd like to see more of our research, you can find it at our website, caravelconcepts.com, or you can subscribe at the link below. Thanks.